All right, thank you very much for joining us for our panel today on the state of operations. We're going to go ahead and get started as folks make their way to their seats. My name is Lance Hackney. I'm a first-year student at Chicago Booth in the MBA program. I'm going to keep this short and sweet so we can get to our panelists, the folks we're here to actually listen to. But first, I'm going to give a very brief introduction for our moderator today, Raam Jani. Raam is a partner at BakerHostetler and a friend and expert of all things ETA, and particularly of the ETA conference. And so he's been involved with a lot of the search fund accelerators, a lot of searchers. He knows the field intimately, and he's just his proof here is his presence here is proof of what a good friend he's been to it. So without further ado, I'll hand it over to him.
Great. All right. Thank you, Lance. That was a little too kind of an introduction, so I will not say anything more about myself, and I will move it along to my friends, the panelists here, to let them introduce themselves. But the panel today is an operating panel, so what we're really focused on here is when you're the CEO and you're in that seat, what are the issues that you face day to day? What's life like? That sort of thing. And so, to kind of set the stage, I'm going to have these guys introduce themselves and give a little bit of their background, kind of who they are, the business that they bought, when they bought it, so you have a sense for how long they've been in that seat, and which ETA model they use. So also you have that perspective when they're giving answers on the operations questions. So and these guys are. They're all my friends coming in, and like some longer-term friends than others, and Kevin is the shortest-term friend. I hope that we leave this panel as friends. Everybody else, I think I can't do anything too much to screw up our friendship, but these guys are people that I've known for a long time and worked with in the community, and I'll let them introduce themselves. So Kevin, why don't we start with you for introductions, and then I'll kind of move us along from there.
Yeah. Hey, guys. Can you guys hear me okay? My name is Kevin. I've been a tech entrepreneur mostly for the past 10 years in fintech, movie ticketing, payments, and whatnot. Did okay, grew a couple of ventures, one to about 7 million in revenue, another one to 31 million. You'll notice on the screen it says I'm graduating 2023. I intentionally left 1.5 classes on purpose so I can get student trade show badges while I was searching and access to IBIS and stuff like that. So those of you guys who are pursuing search, that's a really good hack. Decided to do search thanks to this guy over here, Nick. He convinced me it was a good idea. It is a good idea. We'll talk more about that. The name of my search fund is called Founder Legacy Partners. We recently acquired Destroy Drive. We crush hard drives at data centers. 80% of our activity is actually outside the US. And it's been fun. I'm about 85 days in from being an operator. So, yeah, thank you all.
Tim, why don't you give us the intro?
Good afternoon. My name is Meng. Graduated from Booth in 2012. And about 3 or 4 years after graduation, I became a disillusioned consultant. Luckily, I married up another Booth graduate a year behind me, and my biggest accomplishment in attending Booth. And she told me that if I want to be an entrepreneur, I don't have to have the greatest idea. And she, my wife, sent me onto this journey. In about 2014, I officially quit my job, started thinking about search. And right around that time, through luck, coincidence, and some introductions, I found the group based out of Boston. Name is very obvious, generic search fund accelerator. And it's with their partnership in 2016, I acquired OneSource. So I'm coming up on my 6-year anniversary, actually 3 days from today. Really excited to be here and share my failures, setbacks, challenges, and some successes.
So Tim was, I remember Tim at one of the very early conferences. He had called me, before the conference, he called me and said, I'm thinking about doing a search fund, and I had given him some information. I think he literally knew nothing about search funds, and it was a Friday, and he called me, and the conference was like the following Thursday. And he was like literally at square one of what a search fund is. He'd heard of it from his wife, I think. So he calls me, and so that Friday I gave, had standard phone call that I have with, searchers who are, potentially going to look for representation, that kind of thing. And he, but by the following Monday, he knew literally everything about search funds, and was fully prepared to present to the conference later that week. So when I talk about where Tim came from and some of his story was a great story that he got to tell at that conference. But I like to say his brain kind of works at 2x the speed of everybody else's. So I'm always a little bit concerned when I'm on a panel with Tim that I'm going to miss something. So Charles, let's go to you.
Cool. Thanks, Raam. Hey, everyone. I'm Charles Mullenger. I graduated from Chicago Booth in 2017. Following Booth, I was at a small family office private equity shop and realized I didn't want to be behind a spreadsheet for the rest of my life, so decided to take the search route. Acquired a business in 2019, a company that I grew for about 3.5 years. The company's called Ethos Preparedness. It was an emergency readiness products and services company selling to hospitals and corporate campuses and some direct-to-consumer products as well. About 7 to 8 months ago, I stepped away from the day-to-day of that business. I'm still part owner of the business and lead the strategic direction of it, but recently joined a private equity-backed consolidator of healthcare practices across the company, and I'm leading that company as Chief Operating Officer. So a lot of experience in operations and excited to share some of those experiences today.
And I will say about Charles, another person I talked to very early in his search fund career, and this is somebody that sort of, will never say it, but wears leader on his sleeve. I mean, that is what, you could just sort of put that across his forehead. That's who Charles is. And sort of he was chuckling, he was sort of saying, I'm the grandfather or whatever in this as we were sitting around talking. But I mean, you can tell when you talk to people like Charles, that is who he is. He's in the right line of work. As sort of an operator of a business because he makes people around him better. So so glad to have Charles on the panel, and Nick, we'll turn it over to you. Now, I'm not going to have anything nice to say about Nick, by the way, because we actually worked opposite each other on a deal where we represented the seller when he bought his business. So there will be no compliments for you, Nick, as we go, but we'll move over to you now.
It was a very tricky sale for 9 different stakeholders, and I was very happy to have Raam on the other side of the table. I will say that if he wasn't able to deal with a lot of the brunt force of some of those challenging individuals, then my lawyer would have had to. So I was very happy to still have Raam. It's kind of weird. So being up here, Raam, Tim, and Charles all introduced me to the concept of search funds. They all took calls with me while I was at Booth, and then I'm the one who introduced Kevin to search funds. So this is like a warm and fuzzy feeling up here for me. I started searching in April of 2020 when the world was falling apart, and I thought, oh, no worries, this will be over in a couple of months. So that first 6 months was brutal, but we ended up finding a great company called Door and Window Guard Systems. It's one of those weird niche businesses that you never knew existed until you're in a search fund, and then all of a sudden you see it like, oh, wow, that makes a lot of sense. So we rent patented steel security guards to municipal and commercial property owners to deter crime. And we have a few thousand properties across the U.S. that we're currently protecting.
Great. All right. Well, it's great to get the background. Hopefully you'll kind of see where the different experiences that these guys have as we kind of move into the talk here. So I want to start sort of sequentially and think about the first 100 days as CEO. So now you bought the business, got to the closing. To me, that's the fun part, as the M&A lawyer, we get to the closing, deal's done. But for you as the searcher, the journey's just beginning. You're no longer the searcher. Now somebody, calls you boss when you walk in on day one, and it's not, an intern. So let's talk about those first 100 days. And Kevin, you're kind of in the thick of it. Why don't we start with you? What are the first 100 days like?
One of the things that, I've noticed is, being able to, be in a situation where, we could start stripping down everyone's tasks and then breaking it down in terms of what they do and stuff like that. But I think overall, that's been the biggest surprise, just understanding, how to assess talent and just understanding what types of people you need in order to scale the business. So that's been the biggest learning so far.
Great. And Nick, you've been at it for about a year. I mean, kind of talk about the first 100 days and then how that transitions to the first 6 months and then, for the first year, to give us a sense for that.
Yeah, so when you're in diligence, you're going to create this very detailed 100-day plan, and then you're going to buy the business and you're never going to look at it again. No, I mean, you'll probably look at it a few times, but the reality is you try to put these very intricate plans in place that you're then going to leverage, and the world just doesn't work out that cleanly in reality. I will say my 100 days was both typical and atypical. So it was typical in the sense that it was very focused on listening and learning, and every opportunity you can get to buy someone a burger or a coffee, do it. Just sit down and just try to get to know people and try to understand what makes them tick. And then I would say that it was very atypical because, I mean, my 100 days was still when a lot was changing very quickly in the world. So inflation was the norm, labor challenges were everywhere, people were quiet quitting, people are still quiet quitting. Prices were moving a lot, supply chains were gummed up, and that, I mean, in addition to, I really took over the business with a founder who's still there, and I work with him 8 hours every day, and we get along incredibly well, and I feel very, very lucky for that. But if I didn't have his trust, and we weren't able to mutually leverage his trust to then also make some more strongly intentioned moves, those changes in the first 100 days wouldn't have been possible, right? So we had a short opportunity. We took that opportunity to increase prices, remove a few individuals, add a few individuals, and yeah.
Well, I think that's good, and I think that's really good perspective, and it sounds like you kind of get acclimated, maybe start making some decisions, but then, it feels to me like you are able to, at some point you shift and start putting your own stamp on the business. Tim, do you want to talk about, operational efficiencies, like things that now, like not the first 100 days anymore, but like now that you're kind of in the seat, comfortable, acclimated, talk about your approach.
Probably the one disagreement I would have is you're never too comfortable for too long. Right around 2019, I remember sitting in a board meeting, sharing with my board that I sort of got this. And then what happened right after. So 2 comments to comment on my own learning is right off the bat in the first 100 days, in the first 300 days, most of this audience will have a strong opinion that's backed by analytics and backed by a lot of courage and can-do attitude. So in a lot of ways, you're bringing ideas, you're bringing thought, and you're handing that off to your team to execute. And that's already a huge step up, but where I think the next step up will sort of creep up on you, and if you don't pay attention, at some point, you can no longer be the idea guy. You can't be the guy who figure out something and delegate the task. You gotta staff your bench with guys who have that ability. And unfortunately, when you want to hire that bench, it's not like if you have a need 30 days ago, you'll fill that seat 30 days from now. Those are 6, 9, 12 months journeys. So before you know it, you need to extract yourself from the most important person in the organization to focus on bench building. And that's one thing that surprised me. I don't think I thought hard enough about it. My board kept telling me, thinking about that. I always felt like we're having great success and we knew what to do. The reality is I knew what to do. I need to make sure we knew what to do. And that was the difference. Really big jump for me.
Interesting. Charles, how would you answer that?
I want to build a little bit on what Tim was saying, in that no matter what business you buy, no matter where you end up, you are in the business of leading people. And I think that's the greatest responsibility you can have. And it's a great privilege to have as a young leader of a small to medium-sized company. But that bench building is really where you create the value in the company. And we're going to discuss this a little bit further into the panel, but that's when you get to start thinking on the business instead of in the business. But the first 100 days is, as one of the panelists said, you're getting to know your people, figuring out what makes them tick, figuring out their strengths, their weaknesses, their fears, figuring out what kind of incentive plans make the most sense for their position and what they want to get out of the role that they're in. But everything is going to come back to the people that you have. You did the diligence on the business. You did the diligence on the total addressable market. You know the opportunity is there. It's putting the right people in the right seats who can actually drive that vision and strategy and execute all the way towards creating that value that you want to create for yourself and for your board. So I think the first 100 days is learning your business, learning your people, and figuring out how you can navigate towards that opportunity of getting the right people in the right seats. So then you're really having the people there that can drive what you know is there.
Great. Well, I mean, let's talk a little bit more in a little bit more detail about some of these personnel issues, because I think, you know, it's an important part. It's kind of come up in every answer, you know, so far. And I want to dig a little bit deeper because we want to make sure that we're not, you know, only talking in generalities and only talking in kind of platitudes. Charles, I mean, you had mentioned equity incentive plans. I mean, why don't you talk a little bit more about that? I mean, just so the folks in the audience have a sense for what some of the options are and what some of the alternatives, I don't mean options as a pun, I mean what some of the alternatives are that you can use from an equity incentive. That options thing was a joke, by the way, like that's like a thing you could do is offer somebody options. So nobody seemed to think that was funny. That's all right, whatever. We'll go with alternatives, Charles.
Yeah, I think there's, not to use too much jargon, but there's a lot of ways to skin the cat. When you acquire a business, it's always a good practice to set aside a certain percentage of the company for a management team, right? You want to have management incentive plans so that when you have that leadership team at the table who's trying to drive strategic direction with you, you know that they're also incentivized by that eventual exit that you're going for in this model. Whether you're trying to hold or you actually are trying to exit, I think either way, it's a good way to go. But it's not just about equity incentive plans. You got to go down the totem pole as well and understand that bonus plans and benefits plans, understanding your people and really what makes them happy and what makes their families happy, that is the most important thing you can learn. And the way you get there is one-on-one conversations. And having a management team with you that you trust is going to have those one-on-one conversations, and you trust the feedback that they're bringing to the table so that you are able to put those plans in place. I think if you are it really depends on the type of business you have. You were in tech for a long time. I think your team in tech is going to be very different from the emergency readiness company that I led for 3.5 years, where I had a warehouse and a sales team. My warehouse and my sales team, those are totally different types of people, and the types of incentive plan that they have is going to differ significantly. And I think you need to take the time and understand it. But it's the people in this room that you need to lean on what you should do, and it's your board that you should lean on what you should do, because having that right answer immediately is probably not going to happen. I had a lot of conversations to figure out how to incentivize my people properly, and it's a labor of love, and there's a lot of different ways you can do it.
And maybe, Tim, we'll kind of go to you. I mean, have you also used equity incentive plans over the course of your ownership? Have you turned over the employment, you know, kind of the cohort of employees to feel like this is sort of like your team now? And, you know, was that, I mean, maybe you have not, I mean, or if you did, like, how long did it take to get to where you feel good about the team? And then, you know, talk a little bit about the equity incentive plans too. And I also want to know whether you did this like, hey, we're going to have a town hall meeting, everybody, this is, and like you as the leader get up there and say, this is what we're doing, or more like, you know, Charles was sort of saying, you kind of, your lieutenants do some of it, and it's one-on-one, and some people care more about a healthcare plan than whether they're going to get, you know, a point of the equity, even though, you know, at exit, even though that could be millions of dollars, and to them, you know, saving a few $100 a month on benefits might be even more important than something that might or might not exist. Can you talk about that?
Yes, I'm not really thoughtful on that, so maybe let me tackle something like aligned to that. Is I feel like the relationship between my team and I, maybe more generically, any employee in any business, that relationship changed over the last 24, 36 months. Honestly, I would consider the first 2 months of pandemic to be the easiest of the last 30 months or so. I keep telling my panelists that last 3 years, I got my, it was really punishing, because it's no longer about the financial exchange of incentives of value. Your team is reevaluating why are they working in the business. So a lot of times, things that I took for granted, because I used to build culture, I didn't know it was culture through the way that I like to walk the house. I probably walk the house 5 times a day, and our house are pretty large. So by the end of the day, I probably have 5 or 6 miles under me just by walking the house, tapping their window, say hi. Pandemic stopped that, and remote working stopped that. quiet quitting stopped all of that. So the ability to attract and build that culture, and I come to realize, given your cap table limitation, given all the things that as you get bigger and more sophisticated, it can't always just be an outsized, disproportionate promise. You can only make that promise so many times. It is just about bringing the team together, give them career, professional development along the journey. And all of that to say that it's really hard to figure that out. And I want to say our roles are really, really lonely. I don't know if you guys feel the same way. Sometimes you need to put on a brave face, most times. And so you need partners around you to help you talk through these things that does not have agenda, does not have a stake in the game. And that shouldn't be your family member. That shouldn't be, a lieutenant. It should be your trusted advisors. That's why a lot of times I think assembling the board and having folks on the board that aligns with your incentive and who can have the confidence, who you can have the confidence to have a very private, honest, and a very vulnerable conversation tells them, I don't know what I'm doing. The entire game has changed on me. I don't know how to incentivize my team. And I can't promise everyone 40% increase all at the same time. No business can survive that. So how do I get this going? So sorry, that's not the answer you were looking for, but that's my learning. Get advisors.
No, that obviously I was not looking for a specific answer. I wanted you to answer the question in the way that you answered. And as I had alluded to at the beginning, Tim kind of went 3 steps past where I was thinking, which was a little more of a brass tacks type answer and to something a little bit more philosophical. And despite starting with, I'm not a deep thinker, I believe that was your initial line there, even though you did actually show the level of thought that you had on that. But I mean, you kind of touched on something that I want to maybe move into now, which is the advisors and your board members, your investors, you said, you need some people who are not those directors and investors and kind of board members. Obviously, like relying on a family member for that is going to be obviously a first line of defense, but it's not fair to them. I mean, again, they still are running the family to some degree. They've got their own, jobs and lives and all of that stuff. Obviously they're still going to be your first line of defense, but you need other people too. But I guess maybe Nick, I'm going to turn this one to you because you're from an accelerator. Talk about the board, kind of mentorship and support, investor mentorship and support, and maybe from your perspective, what it's like coming out of an accelerator, and then we'll get some other. But I mean, and you can compare it to what you believe other people are getting. Although I mean, obviously you don't know that for sure, but just kind of give us that sense for the board and investor support and relationship now that you own the business.
Sure. So just so everyone is on the same page, I partnered with Next Gen Growth Partners for my search. We bought the business in October of last year. In a very similar vein to what Tim was saying, I mean, different things matter to different people, whether that's an employee or an investor or a board member. Everyone has a different thing that really matters to them. They want to engage in different ways. They feel like they can add value in different ways. So just taking a one-size-fits-all approach really doesn't work, right? I mean, I have some some board members that are incredibly connected, right? I can call them up and say, hey, do you know anyone in Atlanta? And, within 24 hours, I have an introduction to the mayor and 4 local nonprofit heads, right? But if I send him a spreadsheet or a deck and think that he's going to make it to slide 4, not a chance. I have other board members that love to get into the details and really pressure test me on how I think through each and every topic, right? I mean, you need to look at all of the investors or advisors and try to understand if they're bringing enough value to you for you to offer them said seat. And for me, I feel very lucky to have the array of advisors that I have. Both, if I need to call upon the deal team at NextGen, right, for an add-on acquisition, for example, or my board. I mean, I have 4 individuals on my board, myself, the founder of the business that I still work with on a day-to-day basis. I feel very lucky to have a relationship with him in that way. He's an older guy who still wants to be involved. He's a serial entrepreneur, very successful, but he doesn't want to be the workhorse anymore. And I'm the workhorse that gets all the things done that he has no interest in working 60 hours a week anymore. So he keeps me out of trouble, and I get shit done for him. he's also on the board. And then there's one from NextGen, and then 2 other outside investors and advisors that are really smart, but they each bring something unique to the table. And I try my best to make sure that I'm giving them everything that they want so that they're adding enough value and they feel like they're adding enough value, and therefore we make it a win-win.
That's great. And to be clear, moderator is not censor. So the fact that I wasn't able to censor Nick's comment there, I apologize there for the language. But when you work in Nick's business, I think my hunch is it's kind of second nature. Kevin, why don't you talk about it from the traditional search fund perspective, the sort of board and investor support and like your relationships now that you're actually operating a business?
Yeah, I did a traditional search, and a lot of it was because I've raised money before. A couple of my friends had really big access to Twitter and Square, so those were the first guys that I kind of hit up, and I said, hey, I'm doing this, search fund thing. They're like, oh, is this seed money? And I'm like, nah. And then even now, like, they're thinking I'm raising a Series A round or something like that. It's really weird. But anyway, so I started off that way, and then I think after like the 15th or 16th U.S. investor, I thought, okay, I should probably, look into some of the international investors to really diversify my cap table, because I've always wanted to do more business outside the U.S. I grew up in Seoul, Korea as a kid. So that was like a big thing for me. So I ended up with, 22 or 23 investors. I was fortunate enough to get a couple, U Chicago professors to invest and whatnot. It got a little bit tricky as I was closing the deal because everyone had a different opinion to grow the business. Some of them wanted more growth equity, someone wanted a roll-up strategy. And this was back around March, I think when I was, really getting into DD, and the market was kind of reversing. It seemed like we were going to go up and to the right for a while, but, the market was working against me. So I had some challenges just because there's just so many different opinions, just like how Nick mentioned. So it was a little bit of a trickier situation, but eventually the way the cap table is shaped up, couldn't be happier. In fact, 42% of the acquisition capital came from outside the US, which mirrors kind of like the business activity that we have, which is 80% outside the US. They've been really helpful. One of my board members is actually here. He flew out all the way from South Africa. So very fortunate to have him. Another one's from Spain. And then we have a U.S. investor. So we got a very good mix going on. I was able to get the seller to remain on the board. He's an incredibly hard worker. I stayed at a hostel to save money the other night, and then he sleeps in a car. Like, it was insane. And he's telling the whole team, like, I slept in the car, guys, to save us money. I have a I have a really, I think, really good board structure in terms of, backgrounds and experiences and whatnot. So having my first board meeting in 2 days, so pretty excited about that. But overall, I think it's just very important to just really think about, how you want to structure your fund. For me, it was a big deal to get some of my tech friends involved. One of my investors was also a NASA software engineer, because our investment thesis was like, how do we, find service market fit and transform that into product market fit? It was to digitalize or, bring tech innovation into a business. And we were very fortunate enough to find a cap table that kind of matches that, along with some of the, international investors. So hopefully that answers your question.
Yeah, no, for sure. And the other thing that none of these panelists were traditional searchers during the pandemic. I mean, I had the good fortune of being counsel for a number of, search-backed, traditional search-backed, and accelerators too, but traditional search-backed companies during the pandemic. And I will say that the board, which is many times overlapping with the investor group, I mean, they were very supportive of the searcher CEOs. The pandemic was nobody's fault. The business not doing well was nobody's fault. And the board and the, as investors, I mean, obviously they're fiduciaries of other people's money too, to some degree, but they were very supportive, and they would always pick up the phone, and they were always helpful for, thinking about the should we get a PPP loan? Should we not? Should we apply for this credit? Doing all of those things. And so, like, in my experience, this community, and again, you can pick up the phone and call each other as CEOs. It's a very tight community where, once you're in that seat as an operator, you do have a lot of different people who are willing and able and really desire to support you and to kind of make sure that things stay on the rails. So I want to now I mean, Charles, you mentioned this sort of shift from working in the business to working on the business, and I think it's a really good phrase, and I think it's something that search CEOs will figure out at some point. But so like, what are some maybe tips and tricks, for managing your time? But Charles, like, help me think from your perspective. Help me think about tips and tricks, like kind of brass tacks tips and tricks that people in the audience could maybe take when they do get into this seat as sort of ways to manage time as CEO and to start shifting your focus.
I don't know if I've ever gotten to the point where I really am only thinking on the business. Look, ETA is small business acquisition. I mean, maybe you end up getting a group of investors who foot the bill for you to buy a 10 million EBITDA business, but that's just not the model. So if you're interested in this path, those of you out there who are students or thinking about it with whatever you're doing in your life right now, be prepared to be in the business, like truly in the business, doing things that with the education level in this room, you may never have done before. If you're a military veteran, you probably have, but otherwise it's just very different. And getting to that point of thinking on the business is very, very hard, and a lot of hard work goes into that. I think two things come to mind. Number one is people. I kind of went down that diatribe already, so I'll go to number two, and I think it's structure. Structure within the business is how you end up finding time where you have blocks of hours on your schedule to where you really can think on the business. I met with a gentleman earlier who's an EOS implementer here in Chicago, and EOS is Entrepreneurial Operating System. Some of these guys probably run their businesses on EOS. I implemented it at Ethos Preparedness. It's a great way to structure the way you think about the business, but picking up as many books as you can and reading about those who have gone before you and built different processes and systems for your business is how you're going to determine what is right for the business that you're leading. And once you have those systems in place and the right people in the right seats, that's when you finally get to step away and get those blocks on your calendar where you really feel like you can think on the business and not be so tactical day to day.
Kevin, are you at a point where you want to share this wisdom yet, or are you more in listen mode up here?
I'm probably not optimized yet, but I'd love to share.
Great.
Yeah. So I think one of the challenges is, running the risk of like, should I delegate or not when we don't have a system yet? So normally my day starts around 4 or 5, sometimes 2 or 3 in the morning. So there's a rule where no one's allowed to have meetings with me until 9 a.m. So I get that isolation time and start building in like structure and like handbooks and procedures in place. And then I try not to have any meetings until after 9. So, also given the fact that some of my calls and my meetings are international, so, you don't want to be in a position where you burn yourself out, but you don't want to have like what I like to call operational debt later on by hiring the wrong person or delegating the wrong person. So that's been kind of like the chicken and egg problem. But exactly what Charles said. I mean, the first step is like bringing in the right people, and then you got to implement processes and procedures. And it's been a journey, just being patient and just kind of understand the cadence and getting to know people along the journey as I do this. So that's my 2 cents there.
I think that's great. Nick, what about you?
What was the question, sorry?
Just tips and tricks as you sort of begin to kind of transition from being just sort of a worker that's doing this to somebody who's thinking about what's the next step for this business, working on the business as opposed to working in the business. You as the CEO, how do you what do you do differently or now, or what are you thinking about doing differently now than maybe right when you started, where it was just like, hey, I gotta kind of drink from a fire hose?
Yeah, so while at Booth, I had always heard the adage that the difference between great and a mediocre outcome was just 2 or 3 great hires. And I've tried my best to take that to mind. In the first year, I am over 90% confident that we have 2 really exceptional A hires who have come in, one in the sales and one in the operations. And then that immediately translates into what I'm working on the business and what I'm working in the business, because if they're their areas, then I actually get to work on the business, and it's a lot more fun. But look, there are a lot of areas of the business where I am still very much in the day-to-day. Now, Do I trust my operations director to hire, fire, reallocate inventory, place another order? Absolutely. But there are many pieces of the business where, if I'm working on or in the business, it's just a lot of different shades of gray, right? Depending upon what that task is for that day. I'm managing the outsourced accountants. Well, that means I'm the only one who can actually approve the invoice. Approving invoices, that's in the business, right? But if I am coming up with a strategic plan for how we need to, start updating our patent and then start phasing in the new assets, okay, well, that feels more strategic, right? All about those A players, though.
I think that's great advice. And Tim, what about you?
It's not advice, it's more of just highlighting the criticality of people. Every panelist here talk about how important it is to have great people, but one of the bigger challenges inherently, I think most of search fund business are expected to self-fund your journey. And so you have this interesting point that when you need to get these people, like I mentioned earlier, in your business, you have the type A, your organization may not have the reputation or the financial to attract the type A. So how do you attract them ahead of time so that when you have the financial resources, when you can do bigger things, they're already in the organization? And that is an incredibly difficult challenge that I relied a lot on my board and supporters around me to help me get there. So that's one thing. The other very tactical advice I got from one of the partners at Search Fund Accelerator, Jeremy and I both spent, Jeremy is a partner at Search Fund Accelerator. He spent a long time in consulting, and one of our favorite things, when both of us get overwhelmed with a number of things to think about, we like to sit down, draw a 2x2 grid over the phone. Although we don't draw it down, but we literally talk about that 2x2 grid. One dimension criticality, the other dimension complexity, and we focus on one quadrant and one quadrant only, and you can all guess which quadrant it is. We use that so that even when I feel like I need to work in the business, by focusing on that quadrant that's most important, it will force me to work on the business rather than in the business. And it will force me to delegate everything else, all three other quadrants, to my teams, to my peers, and with certain level of comfort that not everything will be A+ because I delegated. But that forcing mechanism to make sure what I really care about, high criticality and high complexity or low complexity, that quadrant gets A+, because that's what matters to the business.
That's great. I think we're getting to a point where we are going to have Q&A, so I want to make sure, and Lance was going to have people who are interested, line up to be able to ask their questions in a microphone. So, but before we get there, we'll I want to now shift back to like a kind of more true operations, like day-to-day challenges. You guys are all running business, literally running businesses in this economy. Is a recession coming? Inflation, or are you in one? Is inflation going to impact your business? What are interest rates doing to your business? Supply chain issues, and you all run different businesses. Just talk a little bit about that, what you're doing about it, what you see. Are some of these concerns overblown? Are they, are we just about to get hit by, a tsunami? What do you think? So get out your crystal ball. Let us know what you think, and then how it impacts your business and why, because of your particular business. So Charles, maybe we'll start down there.
Yeah, sure. So I'll lean on the company that I started with 7 or 8 months ago, Pacesetter Health. So we have medical practices around the country in primarily podiatric medicine, so foot and ankle care, lower extremity care. And hands down, so number one, supply chain really isn't an issue for us. We're not really sourcing goods from overseas or anything of that nature. But hands down, the greatest challenge is labor. You've all read it in the Wall Street Journal, but we have medical assistants and front desk operators who truthfully will go work at Subway down the street for 50 cents more an hour. And that's a significant challenge, and that's when you need to look yourself in the mirror and look at the culture of the company that you're working at and find a way to motivate them to feel that sense of purpose and that sense of family and that sense of belonging to the company that they're working for. Make them feel like they're part of something greater than themselves and not just the little island of an office that they go to every day. So I think people is hands down the greatest challenge that any small to medium-sized business entrepreneur or operator is facing right now, because it's a challenge nationwide, and I think it's becoming a challenge worldwide as well.
But Charles, and it sounds like you're saying it's not, you can't just throw more money at the problem, it's figuring out how to create culture.
Absolutely, yeah. I mean, every once in a while throwing money at the problem helps, but that's when your board starts asking questions about why staff wages continue to increase and you still have high turnover. So I think it's just throwing money at the problem is not going to solve it. Sometimes that can for one-off scenarios, but I would always lean on creating an environment where people really want to be there and don't even think about looking for that 50-cent dollar raise down the street.
Great. Nick, what about you? What are the, not just labor, but like what are the other things that you're facing in your business?
So DAWGS is kind of a Debbie Downer, because there are certain parts of the business that benefit from a downward market, right? We've also grown very nicely in positive direction markets, but interest rates go up, foreclosures go up, there's typically more property crime, labor also gets a little bit less expensive, maybe steel gets a little bit cheaper because some of the things happening abroad and there's just less demand for steel. All of a sudden, we have some nice tailwinds in the business. Now, we've been able to continually offer many of our employees a lot of really exciting opportunities, opening up new geographies, new opportunities for pay, equity ownership, et cetera. But there's a lot of our business that, in fact, whenever we meet with BankProv, my lender, they always say, "Oh, you want the world to burn, don't you?" I'm like, "Well, not that bad. No." But yeah, we are okay with things getting a little bit dicey.
All right, Kevin, how about you?
So our business is in the data destruction space, and data's ever growing, and some of the markets that we're in, Middle East or Asia, there's just constant demand that's happening. So we haven't really noticed anything. Our operational challenge right now is like increasing capacity within our team and capability. So that's been really the biggest influencer, opposed to whether we're going to charge $5 versus $5.25 for a crushed hard drive. That doesn't really move the needle too much. Now, with one caveat, like I might be too much into the business and I might not be noticing some of the bigger trends. But given the opportunities that are constantly flowing in our direction with brand new customers, it seems like the operational challenges are first and foremost to really create value for the business.
Interesting. And Tim, I think I've now ended with you twice in a row, so I think I did a bad job as moderator. I should not have done that. But why don't you tell us what you think? You're kind of the granddaddy, though. Like these guys are calling me the granddad. I'm no more like the big brother. I don't want to be a granddad, I don't think. All right, Tim, what do you think?
Two things that keeps me up at night, and I spend a lot of my time with my board advisors. One point is on inflation. We have a beautifully built business right before inflation kicked in, because all 90+% of revenue are contractually obligated multi-year contract. That sounds like excellent thing until you realize that means you get to reset prices every few years. So how do you think about creating value? So that's one interesting dilemma. I won't dissect here, but you can imagine. And if this audience wants to find those contractually obligated multi-year contracts, those are excellent business, but in this environment, it introduces some interesting challenges. The other one is the challenge. You know what? I'm going to end there. I think that's a big enough challenge.
I was waiting for whatever it was that was about to come out, because it was going to be really good. We'll have to, the next panel, this is like a cliffhanger. This is like a cliffhanger panel. Everybody's got to come back for Tim's
next year.
Right, yeah, for Tim's next panel. We'll hear what that one is. But so let's see. Do we have questions from the audience? All right. Yes. All right. Lance. Yep.
Hello. I'll just ask folks to please bear with me as I hustle around the room.
Hi, everyone. Mark Connor, going to be starting a self-funded search here pretty soon. On the topic of hiring, it'd be great to get a bit more tactical advice, especially when you are, in a smaller 1 million, 1.5 million EBITDA business. How do you actually do the hiring? what are the avenues you're going through? Are you doing the first interview or the last interview? Who are you trusting on your management team to actually do the complete hiring process? As I think of hiring coming from a consulting firm, it's very rigid in the process we go through, and now going to this environment is always something on the top of my mind.
Who's got the smallest? I mean, Mike, we just,
probably.
yeah, okay.
Yeah, I mean, so my problem is that I don't have the talent to actually even do an interview right now. That's been problematic. So for example, my search fund, we had about 6,000 applicants altogether for interns, and we ended up only bringing on 70. And then 4 of them actually became investors. So I actually raised $125,000 from my search fund interns because they were so enthusiastic about the culture, and 4 of them are actually working at this fund right now. So I was able to create culture, mold them, and all that stuff. All our interviews are recorded and whatnot. And I come to Destroy Drive, we only had 5 office workers and 5, on-site full-time people, and now we expanded to like 15. But because of the lack of talent, I have to do the interviews. I actually trained a couple people, and they would just not ask critical questions. And then normally after the interview process, we make them do like a handbook, personality test, like the whole, dance. But I think my case is a little bit different. And if you're looking for a smaller business, until you maybe even get to 20, you might not have the personnel that could sufficiently assess someone.
Yeah, Raam, let me jump in on that too. I think you asked to get down into the tactics, and I just thought this was worth sharing. So there's 2 things I try and walk away with when I interview someone. Number 1, are they aggressively interested in what that role and function actually is? And the key word there is aggressive. Is this the person who's really going to do whatever they can to be successful in that role and that function? And then number 2, does this person align with the core values of the company? Defining what your values are at the company and what is going to define that culture is really important. I always interview against what the core values are and see if they really fit that mold.
Thank you. This is Sohail Reza. Looking to get my search fund started soon enough. So question is, if you were to look back and look at the due diligence that you have done for your company that you have acquired, how would that change given the current economic circumstances? Interest rate, higher, looking at a recession, number of things have changed, I'd say, in the last 6 months or 9 months, right? So think about what would you do differently in terms of due diligence that compared to what you did then?
Let me take that. I think, given my own personality, I'm generally biased towards analytics. So I don't think anyone in this audience will have a risk of not spending enough time on numbers. What I didn't do enough back then, but I think is critically now, is does your team have the cultural momentum behind it? Do they like working with a fast-moving organization? That diligence becomes critically important. Our organization historically had a very low attrition. In 2021, in one of our biggest years, we also had the highest attrition. And the attrition, a lot of things can be solved quickly. Culture, and therefore implication of the culture is attrition or retention, is very hard to solve, and it takes a lot of time to solve. So that might be something I overinvest in this time.
So Lance, why don't we take one more question, and then I want to give everybody the chance to kind of give us a minute of words of wisdom. If there's one more question.
Hey, I'm Mark, self-funded searcher here, and my question is related to company culture. Where have you had the most success building company culture? And I guess, just a success story would be awesome.
So I will say, before the pandemic, our entire company was in to the office every day. I mean, given there's still satellite field offices in 9 other cities, but pre-pandemic, it was pretty straightforward, right? I mean, there'd be a weekly potluck. Everyone would know everything about everyone's activities. That's become quite a bit trickier with everyone being spread out. We do a monthly breakfast. We do biannual, either a Christmas party or a White Sox game or a Cubs game, just bringing all the foremen in, all the managers, everyone from across the country into Chicago for a weekend. And then we've also set company-wide revenue goals on a monthly basis that then everyone gets bonuses off of. And that's really important for us as a growing organization because then everyone's rowing in the same direction versus what very often happens between a field team and an office team is that something goes wrong, the other side immediately points at the other as like, oh, it's your fault, like, oh, you dropped the ball. We needed to find ways to get everyone tied and cheering in the same direction. All those things.
Great. All right. Well, we're just gonna go down this way this time. So Tim, you're gonna go first. But so to just sort of ending with words of wisdom or anything that they want to talk about. The one thing that I have been hearing a little bit about in the community, and I don't know whether you don't need to address this on your talk, is that for employees, not for like high-level executives where clearly equity incentives are going to be part of what you're going to think about when you're hiring them, but more like a rank and file, kind of pool of if certain returns are met, there's just sort of a pool of capital at the end where all the employees are going to get a little something at exit, as opposed to this all really being about the executives and the CEO and the investors making a lot of money, making it a little bit more egalitarian and more about rank and file employees. So that's something that I have heard in the community is something that's starting to move around a little bit. So that's my last word. Now, Tim, what's yours?
My recommendation for the CEO, him or herself, is to find a really solid support organization around you. It is a very lonely journey, and it takes a long time to build that support structure around you, and it is going to really help you, especially our organization. Generally, we all start with a fairly small organization, so it's going to be a lot of different challenges, some highbrow challenges, some really esoteric challenges. It's going to hit you, so make sure you have a good emotional, and not just intellectual, emotional support group around you.
So I feel like we're just going down the analogy of a jockey, horse, trainer track, right? I feel very lucky to have found my way into an industry that is growing and unique, that we've had a lot of opportunity, and it's changing, growing into new markets. I feel very lucky for that. If I didn't have an exceptional team, though, it would all be for naught, right? I mean, I needed the team around me that we could actually execute upon this opportunity.
I'm gonna disrupt the pattern here a little bit. So I think just not being afraid to try something new. I think you can even just create a Wix website and then come up with a color and like a tree or forest, blue forest, capital. And then just start calling some sellers, like even while you're at school or while you're working part-time, and just realize, there's a lot of people willing and ready to sell their business, at least listen to you. So I remember at the end of my search fund, I was having these 19, 20-year-old interns just making cold calls all day with me. So it's not as difficult as you think it is if you have decent strategy and decent people to help you along the journey. But first and foremost, I think just being action biased and giving a shot and just seeing if search is for you. So.
All great advice. The final thing that I would say is do your best to create an insatiable appetite for reading. Pick up as many books as you can, whether that's about historical leaders and entrepreneurs or the Wall Street Journal or anything along those lines. You'd be surprised once you're in an operating role how often you pick up nuggets in a good book or in an article that immediately becomes applicable to what you're going to do for the next week. And it's been, for lack of having a community around you when you don't have someone to talk to, it's pretty amazing what a good book can teach you.
Great. Well, with that, Lance, if you want to, maybe we're ready to take to the next, if you've got the mic and you want to tell us what we're doing next. Otherwise, thanks everybody for joining us, and how about a round of applause for our great panelists here.